Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. Yes, Bitcoin on the 4-hour. We were flirting with the basically the chance of this area, this support zone being front ran, trying to get our way back above 4,400. Sorry, 44,000. That would have given us a good shot of testing the top of the range again, which would be basically this $46,000 to $47,000 level, at the top of this sideways range that we are potentially going to be in now. But that wasn't to be. We did want to come formally and properly test into basically this $42,000 level, which is fine. Providing we do hold this level. What I will say is that Bitcoin does like to trade out these sideways ranges for a period of time. So I do personally think it would be unreasonable not to expect Bitcoin to trade sideways within this like say 41 to 46, $47,000 range. And I also think it would be potentially unreasonable and unlikely that we didn't come back at some point and test $46,000, even if ultimately we are going to get rejected there, come down, take out 41 and find ourselves somewhere deep in the $30,000 somewhere in the next range, basically in the next sideways potential range area. So that is kind of what I'm seeing here. Obviously if we do break below, come below here, then yeah, I mean, fair enough, we may wick down, we may spend a day or so below, but I do kind of expect that we have got to, even if we are going to trade low, we've got to grind out this area. There is obviously a lot of despair, a lot of fear, a lot of potential capitulation in the market at the moment, and funnily enough, people in the market, when they become extremely fearful and you hit that sort of despair emotion, then that is also the point where people that aren't in the market, fresh capital, that is usually around the same time area, same price levels, that fresh capital will be like, oh, I'll have a look at this, I'll have a look at this asset. Don't forget, lots of people aren't just in crypto or aren't in crypto like at all at the moment, so various people will look at it and look at this dip and think, well, this looks like a good a time as any to maybe buy some, maybe if they plan on buying some more lower. It just is a tempting price level. So yeah, whilst say you are in, you're like all in crypto, you might think that things are looking particularly bad, or extremely bad, that will be the point where more and more people that aren't involved will start to look in at what's going on and think, oh, I might take a gamble on that, much as they did obviously with the March lows. They basically saw that and thought, well, I'm not having it before, I'll buy some now, and lots of other stocks as well. I do know they had stimulus checks and there was all that, but yeah, they could have spent those stimulus checks on whatever, but they looked at the markets and thought, do you know what, this looks like a better thing to spend it on, and yeah, it turns out they were right. So yeah, that's kind of what I'm thinking here. We have broken down, we have tested the bottom support area. Like I said, it is unlikely that we just come straight down and then come back down to, like, say, the next level around either $38,000 or even $36,000. I don't think that is, like I keep saying, I just don't think it's probable. I don't think it's probable that happens, and when I say it happens, just happens in the immediate term. Ultimately, like I said, we certainly can come down to these levels, certainly can. I just think that we have to grind out this area in this range first before we then make a decision on whether we break below or whether we break back above. So it is not, obviously it's not financial advice, but people will be looking at this as a good risk reward area to buy, even if your stop is like around 38, 36, which is and obviously you can see how far that down is. But then if you're targeting say 47 or back into this range towards $50,000, yeah, it's a good risk reward trade. And obviously people like to buy the support, don't they? So, and then ultimately they'll like to sell the resistance, and then it's just a case of can we break through or not. So the Ethereum Satoshi pairing is getting wrecked here, as we can see. Ethereum is clearly a higher beta asset. It is a more liquid market, especially obviously with staking 2.0. So a lot of Ethereum being taken off exchanges. People are buying and hodling Ethereum. So obviously when people then want to actually cash out or sell some when the market's dumping, it has a proportionally larger effect on the market, which is essentially liquidity. Is basically how higher beta stocks, not stocks, but just any asset. That's how it works. So like there is less liquidity in the silver market as opposed to the gold market. So on obviously upswings and downswings, so silver will move more to the upside and more to the downside. It is the same with Ethereum, and that is, I believe, what we've seen here. But we are into an important area for the Satoshi pairing to hold, and also if Bitcoin is to hold this level and start to stabilize, maybe grind back up, I would potentially expect a quicker recovery for Ethereum, and then as such the Ethereum Satoshi pairing come up. The only problem is though, if we do look at the Ethereum USD pairing, we are basically in no man's land. There's no real areas of anything that we're in. I mean, we could draw a weak horizontal support here around this area, probably draw it about here. And yeah, I guess we tested blowing back above that now, but the next major real area is basically this area down here, which is around 2800 basically. So like I said, we are in basically no man's land. So either this is we recover this area quite quickly, get back above, well, we can call it around 3400 for Ethereum, or yeah, if we still see more weakness in Bitcoin, then yeah, we will see lower. All I will say is that obviously Bitcoin, like I said, is at support. So if it does move up in the dollar value, starts to grind out its range it's in at the moment, then maybe Ethereum can recover this range quite quickly, and then get back into the relative safety of basically in the 3500s. Bitcoin dominance, obviously having a bit of a pull up here as well. Nothing too major in the overall trend though. So yeah, not too much happening there. Obviously the all important, oil first, looking very bullish here, looking very good. DXY doing a whole lot of nothing still. The 10-year, I do honestly think the 10-year is going to be topping out around here, more based on the fundamental aspects that it's basically that we're going to have to start to price in a recession. Well, it sounds bad saying it. We're going to have to price in some sort of recession, potentially starting in Q2 this year, which is not long away, is it? I mean, there are four Qs in a year, so that is 3 months, and we're in the first of those sort of said 3 months. So any point after 3 months, maybe even at 3 months, or maybe even before 3 months, we will most likely be in a recession. So the bond market's basically got to price that in, so it will have to come down, and the longer it stays up here, and if it does inch higher, that just increases the likelihood of that recession, and it will have to come down. The Fed, there is in my mind, there is zero chance of the Fed completing its 4 rate hikes this year, and to be honest, I think there's about a 90+% certain chance they don't even complete 3 rate hikes this year. They may just be that textbook one and done when they realize that we just live in a big debt fueled Ponzi, and the debt levels are off the charts. So obviously, how can higher bond yields be paid? We'll have to see yield curve control, then potentially see the dollar get hit based on that. Price controls, all sorts of cool stuff is going to happen, because they can't raise rates. They are just jawboning. That's my view anyway. Hey, let's see what happens. What else do we want to look at? Yeah, all important stocks. They are struggling to get back above this resistance area. But if they do get clear, and today's the day, today's Friday, today's the weekly close. If they do get clear of, well, we call it 420 to 440. Ideally, we want to be have a nice rally today and close around the 4740 area, and then yeah, things will look good. People will look at it over the weekend and think, well, just buy the dip as usual. Forward check, back check, pay check, that is what they'll see. If we do close below this, or even worse, close lower, maybe sell off into the close today, then that won't be ideal. We did used to get quite a few sell-offs into the close on Friday, because we used to get basically people coming and talking over the weekend. But obviously the Fed's done its talking. It's not going to come do more talking over the weekend, so there is no necessarily real reason for people to sell into the close. But if people decide they want to sell anyway, and then more selling ensues, then there we go. That's how more sellers than buyers is the reason why markets go down. So yeah, we could get that, but I am hopeful that people will see the see that the wider picture, that that number only go up. We are gonna be in a crack up boom. These prices have to go up. Inflation has to stay. Interest rates can't go up. I mean, I'm not saying they can't go up like a few basis points, maybe even 25 basis points. I'm not saying they can't have a rate hike, but they can't basically get even close to the levels that will be needed to rein in inflation, and nor do they want to either. They are only doing something about it now because as we said, the frog now realizes it has been boiled. And basically the people are kicking off with high prices, so like they kind of have to do something about it. They don't want to, and they want to see more inflation. They want to see their asset prices higher. They don't care that the regular person is paying more for things. They just have to look like they care. Now the regular person has realised they're paying a lot more for things and they're struggling. So yeah, we're going to see all sorts of wild stuff though, because ultimately just give the bottom half of society like a UBI, just give them free money and they can afford the high prices, and then the rich can keep going richer, the poor can survive, and we just end up in a completely I don't even know what kind of economy it would be, but potentially socialist, but wouldn't be textbook socialist, but it would just be a weird economy. Weird market. So yes, that is what we have potentially got to look forward to. So yeah, lots of crazy stuff. Right, let's have a look at those stochastics. Like I keep saying, I think once the 5-day and weekly turn up, then we could be looking for potentially a nice move to the upside. So yeah, 4 hour is low and turning back up, so can we get a bit of a bounce here based off that? Yeah, potentially, which all that really equals is that we can potentially hold this support for a period of time. 10 hour still down but pretty low, same with the 12 hour. Daily as well, down and pretty low. Buy daily still down and pretty low. 3 daily down and pretty low. 5 day, I mean, these are the important ones. 5 day diving, weekly still diving, bi-weekly coming down, and monthly looking to turn down here. But yeah, so we've pretty much got a full house of down, but these 5-day and weekly are getting pretty low now, so they're getting to the point where I think they will basically have a good chance of turning back up. The market holding here, turning back up. Like I said, even if it is just to a test of the top side of this sideways range, as you can see, like we traded here, I mean, even when we break straight through the level on the move down to the next level right now, we still rallied all the way back up to that next level support of the lower level area of support, and then came and tested the upside of that range. So like I said, I think it would be unreasonable to expect us not to trade out of this range, and ultimately that does not necessarily give a bias as to whether we then break the upside and then continue with the bull market, or whether we just bounce, come back down, and then come and test lower prices. So yeah, it's just a game of levels, guys. It's just a game of support and resistance. And that is that. So yeah, remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.